It's always crazy when like a legend retires from something. You know, Michael Jordan retiring from basketball and then baseball and then basketball again. Tom Brady retiring from football. Oh, wait, no, that's never going to happen. Go Bucks. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of May 3rd, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Well, this week started out fantastically. The markets were climbing Monday, Tuesday, Wednesday, and then sharply dropped Thursday and Friday. I believe all four of the major indices closed negative on the week, but everything wasn't terrible this week. We did have a lot of the big players, the FANG stocks, reporting their earnings. We're going to go through the earnings very quickly today and not spend a lot of time on each of them, but just hit the highlights. These companies are bigger than some countries' entire economies, so I would feel remiss if I skipped over them. Also this week on Tuesday, we had MindMed going public. I made a DD video about it last week. Check it out if you haven't already. I did mention that I was going to probably buy some shares to trade, but the price ran up way too high, so I'm just going to kind of sit on this one till it runs down to about $3 or so, and then I might start trying to trade some stocks on MindMed and sell the FDA pops. Let's get started with the news. If you're new to the channel, just a reminder, I do publish my TA every single week. This is my practice that I'm sharing with you guys. I cover about 11 companies. The new one added this week was MindMed because I am going to be watching this looking for a good entry point. If you're interested, the link is below the video. First news story, Jerome Powell went ahead and made everybody sad with another press conference. The Fed decided to keep rates near zero on Wednesday despite noting signs of economic rebound. Federal Reserve Chairman Jerome Powell said he does see some froth in the equity markets and other places, but sought to attribute the conditions to factors beyond the central bank's accommodative policy. Some of the asset prices are high. You're seeing things in the capital markets that are a bit frothy. That's a fact. I won't say it has nothing to do with monetary policy, but it also has a tremendous amount to do with vaccination and the reopening of the economy. Powell went on to talk about jobs, how the economy is recovering, and they're still not where they want to be, but we kind of knew that because from his own projections, we weren't going to be where we wanted until the end of 2021. So they're going to be keeping the interest rates between 0% and 0.25%. The 10-year Treasury yield held to its modest gains for the day after the Fed released its policy decisions. The key market rate was last trading at roughly 1.647%, well off its highs from earlier this year, but still comfortably above where it began the week. During Powell's press conference and immediately afterwards, the 10-year Treasury yield rate ended up rising a bit, and this correlated with a bit of a market sell-off. So you can actually see in real time the inverse correlation of the 10-year Treasury rate and the equities markets. It was pretty cool to watch. I definitely enjoyed that. I'm a nerd. Next news story, President Biden signed a $15 minimum wage for federal contract workers. Now don't get excited, it's not like for the entire country, it's only for federal contract workers, but it is going to be a $15 minimum wage, which I believe is going to be like a 40 to 50% raise on their previous wages for the people that were making the minimum wage before. Biden administration officials said the higher wages would lead to greater work productivity, offsetting any additional cost to taxpayers. This executive order will promote economy and efficiency in federal contracting, providing value for taxpayers by enhancing worker productivity and generating higher quality work by boosting workers' health, morale, and effort, the White House said in a statement. I don't know if I buy this, but they're basically saying this is going to cost the country more, but because the workers will become more productive, it's going to offset. Okay, that's basically the global argument to increasing the minimum wage to a certain level, so I'm not surprised to hear them saying it. There's pros, there's cons to both sides, but this didn't actually have an impact on the equities market this week because it is just the federal contract minimum wage, so it's not like businesses are directly going to be footing this bill. I actually think this is going to put more pressure onto the general minimum wage increasing because I feel like this is kind of like a set of dominoes. Once the first one falls, the rest follow suit. So this is something that now now that it's started, I feel like we're going to want to pay attention to this in the coming months. Now, I want to get into the FANG stock earnings and Tesla also, and I'm not going to cover these whole earnings reports because like everybody reported this week, but I just want to hit the highlights for each one. Let's start out with Tesla. The Model 3 was the best-selling premium sedan in the world for the last quarter. In quarter one, we achieved our highest ever vehicle production and deliveries. This was in spite of multiple challenges, including seasonality, supply chain instability, and a transition into the new Model S and Model X. Our GAAP net income reached 438 million, and our non-GAAP net income surpassed 1 billion for the first time in the company's history. Their total revenue grew 74% year-on-year in quarter one. This was primarily achieved through substantial growth in vehicle deliveries, as well as growth in other parts of the business. Do you guys remember when Tesla made news earlier this year because they spent about $1.2 billion on Bitcoin? Well, they addressed that right here in the profitability section. I mean, this is on like the 5th slide of their presentation. Year over year, positive impacts from volume growth, regulatory credit revenue growth, gross margin improvement driven by further production cost reductions, and the sale of Bitcoin. $101 million positive impact were mainly offset by lower ASP, increased SBC, additional supply chain costs, R&D investments, and other items. Model S and Model X changeover costs negatively impacted both growth profit as well as R&D expenses. They talk about the quarter-end cash levels, a net cash outflow of 1.2 billion in cryptocurrency Bitcoin purchases. On the 5th slide of the presentation, this is like they're trying to get this message out there. They're showing that they spent $1.2 billion in Bitcoin, but they ended up selling off some of the Bitcoin and profited $101 million, and this helped offset some of their other losses. So I think the company might have come under some fire for investing in Bitcoin, but this shows that their investment actually was a good thing because they ended up offsetting losses for a pretty rough quarter for expenses. If we take a look at the Tesla daily chart here, here's the day earnings were reported. The company closed at $738 a share. We went as low as $667 per share this week, but we're back up to $709. So on the chart, you could see investors were not very happy with this earnings report. You know, the company did report a bit of a loss, even though the revenue was increasing. That being said, it's Tesla. Price is going to recover pretty quickly. Let's move on to the Facebook earnings report. Now, I thought the Facebook ones were possibly the most impressive. Facebook reports first quarter 2021 results. Their revenue, their advertising revenue was up 46%. Total revenues up 48%. Their net income is up 94%, and their EPS is up 93%. Their net income for 2021 was 9.5 billion. The net income for last year, 2020, was 4.9 billion. This is an incredible increase in the profitability of this company. In my mind, like objectively, I know the market cap and I know the popularity of the platform, but I don't think of it as this huge market mover. I don't know if it's because I don't physically see a product from them. I know Facebook social network and everything, but for some reason I have this disconnect in my head. But when I see this $9.5 billion in net income, it just blows me away. This is incredible. And if you're one of those people that say, oh, Facebook is a dying social media platform or something like that, their daily active users were 1.88 billion on average for March 2021, which is an increase of 8% year over year. Monthly active users, 10% year over year increase. So Facebook is making money. They're selling ads. They have an increasing user base. This company is healthier than ever. Let's take a quick look at the Facebook chart. You could see their earnings report here. The day of the earnings, they closed 307. The next day they opened at 330. So this was like an 8% gain on open. It went as high as 331. Wonderful response to the Facebook earnings report, deservedly so. Amazon shares hit a record high after a blowout earnings result. The surge came after the company posted yet another quarter of ballooning sales and earnings, easily exceeding expectations as a pandemic-driven pickup in online shopping and cloud demand showed no signs of slowing down. The company's first quarter net sales jumped 44% to $108.5 billion, and this is the second straight quarter with a revenue over $100 billion. The beat was driven each by Amazon's e-commerce, cloud computing, and advertising segments, with online store net sales of $52.9 billion, AWS net revenue of $13.5 billion, each topping estimates. EPS of $15.79 easily topped the $9.69 expected. I don't even know where to go from here. Retail's up, AWS is up, the company beat EPS by like 50%, over $100 billion for the second straight quarter. It's Amazon. Even though they just lost Jeff Bezos, it's still the strongest retailer in the world. Here's the Microsoft earnings. I've mentioned a couple times on this channel, I'm a Microsoft shareholder. It's one of the few non-ETF investments that I have in my retirement portfolio because Microsoft in my mind is really just that good. Revenue was $41.7 billion and increased 19%. Operating income was $17 billion, increased 31%. Net income was $15.5 billion GAAP and $14.8 billion non-GAAP, and it increased 44 and 38% respectively. EPS was $2.03 GAAP and $1.95 non-GAAP, increasing 45 and 39% respectively. The numbers are crazy good. This is stellar report, earnings report. Every single one of these huge companies' earnings reports has been phenomenal. I'm most interested in Microsoft's Azure, their cloud service, because I believe that's the future of the company. So their revenue in intelligent cloud was $15.1 billion. It increased 23%. Server products and cloud services revenue increased 26%, driven by Azure revenue growth of 50%. Wow. Azure's growing at a remarkable clip. I'm pretty sure it was close to 50% last earnings report, 50% again now. Unbelievable growth. I love it. I know AWS is a competitor for Azure, but I think there's just room for both of them to keep on going. Let's look at the Microsoft chart. This one actually dropped off after earnings from a high of 263 the day before the report to opening at 256 the next day. So this wasn't as big of a drop as like Tesla, but it was a drop nonetheless. That being said, we did have a pretty strong run up into earnings there. So this is just a little bit of a correction. So I think Microsoft is just going to continue its northward progress. Apple reports another blowout quarter with sales up 54%, authorizes $90 billion in share buybacks. Okay, we know Apple is a $2 trillion company. We know that the market cap of Apple is bigger than the entire Australian stock market. Sorry, Aussies, that's not a shot, it's just a fact. But to put this $90 billion stock buyback in perspective, that means Apple is going to be buying back about 4% of its shares outstanding, which of course is going to increase the value of these shares remaining. $90 billion. That is a larger amount than the market caps of over 400 of the S&P 500 companies. And Apple's just using it to buy their shares back. Cool. EPS was $1.40 versus 99 cents expected, so 40% higher. Revenue was $89.5 billion versus 77 billion estimated. Even their gross margin improved, 42.5% versus 39.8%. Apple didn't offer any guidance for the next quarter, but these figures were incredible enough on their own, and that stock buyback is going to keep people excited, probably enough to keep the Apple share price rising until the next earnings report. If we look at the Apple chart, you could see the earnings were released here. The day before the earnings were released, it closed at 133.58. The next day, it opened at 136.47, reaching a high of 137 before dropping off. There was a lot of initial excitement here after the earnings report. You can even see this big volume candle here. A lot of times what happens after a company announces a big stock buyback is there's a huge volume spike the day afterwards because investors are trying to get in to have the appreciation of the buyback value. That's not always the best strategy, but impulsive investors be impulsive. They're just going for it. This one was really funny. GameStop raised $551 million to accelerate its e-commerce push, and its shares jumped. A couple months ago, GameStop filed a shelf offering saying they were going to issue 3.5 million new shares. And through the entire spike, the squeeze, the start of the squeeze, depending on who you talk to, the company never issued any of those 3.5 million shares. They've just been sitting on them. They went ahead and ninja sold them like 2 weeks ago and then reported it at the beginning of last week. It sold all 3.5 million of these shares at an at-the-market offering, not a discount. Based on Reuters' calculation, the average price of the shares sold was $157.43. It's not like the company offered some discount for these 3.5 million shares. People were excited enough to buy 3.5 million shares of GameStop at $157.43 per share. Wow. And you know how like after a company announces a dilution, what's the thing that we always see in the stock market? The price per share drops because people are angry at the dilution. They know their shares are going to be worth less. They just sell out of their position. GameStop, keep in mind, does not behave like a normal stock. This sale of 3.5 million shares was announced on Monday. Now on Monday, the price per share opened at $150.98, closed at $168.93, so we gained like $18. The next day, we went as high as $188. That's right, not only did GameStop sell 3.5 million shares at market price, but the company's stock price ended up increasing by about 20% after the announcement of that offering. No, there's nothing going on here. There's nothing suspicious about the way this stock behaves at all. I'm sure the short statistics are totally accurate that are being reported right now. Now, on this channel, I did do a DD video a couple weeks ago on Citius Pharmaceuticals. The phase 3 Menolock results have been delayed because of some COVID-related issues where a few of the facilities that were supposed to be testing patients did back out of the trial. So we don't know exactly when the phase 3 results are going to be released, sometime this summer, hopefully, but we're just waiting on updates from that. The company did, however, release a bit of a PR at the end of the week. Citius Pharmaceuticals reports strong clinical community engagement during Menolock phase 3 trial-related webinar. Basically, the company hosted a webinar. It's open to the public, but these things are typically attended by medical professionals. The company reported its highest attendance ever at one of its webinars. Apparently, the medical community is very engaged, very excited about this drug, which bodes well for sales. If they can drum up excitement and PR before the drug is actually approved, then you know as soon as it's approved and manufactured, hospitals are going to be stocking it, companies going to be pulling in revenue from it. The stock price has really kind of reflected this. For a while there with Citius, we were kind of hovering around that $2 range. We ended up dropping down the third week of April to about $1.50 where it bottomed, but since then we've been climbing as high as $2.30. We closed at $2.20 on Friday. Keep in mind, this was a red day for the rest of the market and Citius is still climbing. After market, we ended up going up to $2.25. Citius did announce there's going to be a vote for another dilution, which obviously is not ideal, but I think it depends on who buys the diluted shares. If it's going to be institutions, again, then I'm not really too worried about it. And if the shares are bought near market price, then I'm not really too worried about it. So as long as they're not being sold at a massive discount, I don't really care because the price is going to pop on the phase 3 results anyway. Now, very quickly, I wanted to review my options plays. A couple weeks ago, I talked about Schnitzer Steel. I thought that I had missed that option, but actually it turned positive this week and I ended up closing it out at a 25% gain. So I was very happy with that one. Weyerhaeuser, the option that I opened up for the lumber company last week, I ended up closing it out on Thursday at a 42% gain prior to the earnings report. The earnings report was a little bit mixed, but I mean, a 42% gain in 4 days of holding is pretty awesome. Also, the FireEye option, that one did not work out very well. I played the straddle on FireEye. The earnings were released. The stock did nothing, like absolutely nothing. It hasn't moved. And when you're playing a straddle, you're expecting a high volatility move in one of the two directions, either the call or the put. The third option is that the stock doesn't move, and that's what this one did. So I still have the call and the put open. Keep in mind they expire next Friday, but what I'm probably going to do is just hope for a volatility miracle on Monday morning, and I'm just going to close them out on Monday morning when the market opens, and I'll just take the loss. Depending on the volatility, I'll probably only be losing about 30% on that one, so that's not really a big deal. Prior to that one, I think I was right on 8 in a row, so this is a pretty solid batting average here. Let's take a look at the upcoming earnings for this week. I'm actually recording this video on Saturday because I'm traveling to Seoul on Sunday for my MTN interview on Monday morning, and Earnings Whisperer has not released their earnings graphic yet, so we actually just have to use the NASDAQ website. On Saturday, yeah, that's right, earnings on Saturday, how weird. Berkshire Hathaway is announcing their earnings. This is their annual shareholder meeting. This is the Woodstock of capitalism, but it's actually not being held in Omaha this year. I think it's being held in Los Angeles. Anyway, it's always good to hear Warren Buffett, Charlie Munger speak. Monday, energy companies. There's a lot of energy companies reporting this week. Oil companies, solar companies. Chegg, I'd like to take a look at Chegg because I'm invested in Nerdy through the Pace SPAC. Tuesday, we've got Pfizer, CVS, T-Mobile, Activision, Blizzard, more energy companies going through here, some chemical companies. Wednesday, the big one is probably PayPal. Also, we've got GM reporting, rocket companies. Oh, my baby rocket. I get to read their stellar earnings report again and then watch the share price not move at all because it's being heavily shorted. On Wednesday, another one that I'm going to be playing options on is going to be Leslie's Inc., which is a pool supply company. I'm going to explain this one in a bit. This one took a lot of research, but they're reporting on Wednesday. Thursday, Anheuser-Busch InBev, Square is reporting. This is another one that a lot of people are going to be very excited about. Zoetis is a good one for all the Zomedica holders to take a look at if you want to see how a real veterinary equipment company is run. Ooh, burn. Moderna, Regeneron, Roku. Also, ArcelorMittal on Thursday for steel. Friday, we've got Cigna, Enbridge, DraftKings, a lot of people are excited about, and some more energy companies. One more note on the Berkshire Hathaway meeting. This is a really odd moment. Warren Buffett will provide a visible clue on his succession strategy at the annual meeting. Buffett and Munger are going to be joined on stage by Vice Chairman Gregory Abel and Ajit Jain. Abel and Jain, from what I've read, are incredibly capable investors, but they're literally going to be replacing legends Buffett and Munger. Now, Buffett and Munger are not necessarily retiring, but they're both in their mid-90s, and at some point they are going to be stepping down here, so Abel and Jain are going to be stepping up for them. This is going to be a really interesting annual shareholders meeting because all four of them are going to be on stage talking, so I think a lot of people are going to be tuning into this, checking out what these guys are going to be saying. It's always crazy when like a legend retires from something. You know, Michael Jordan retiring from basketball and then baseball and then basketball again. Tom Brady retiring from football. Oh wait, no, that's never gonna happen. Go Bucks. Options play number one for the week. This is the one that I did a ton of research on. I'm gonna continue the trend of doing options plays on companies that are benefiting from some type of materials shortage, like with the steel companies, like with the lumber companies. Now we're going to be doing chlorine. Yes, chlorine, don't bash me. It's used in water purification all over the world and other things like epoxies and chemical stuff I don't understand. It's a widely used product. This is on CNBC. This was published on Friday. So this is kind of the first that anybody's really seeing this in the mainstream, and I'm getting in on this option like immediately. You'll see in a moment, this isn't like the perfect time to buy the company, but I don't care because I want to get in on this before everybody else does. Now, a major chlorine shortage is set to spoil summertime fun in the swimming pool. As homeowners start to prep swimming pools for the season, they'll face a widespread chlorine shortage. Chlorine, like I said, is used to purify not just drinking water, but swimming pool, jacuzzi, hot tub water also. In some parts of the country, pool supply stores have imposed quantity restrictions. In other areas, prices for chlorine tablets have already doubled. A pandemic swimming pool boom created higher demand for chlorine, then a major chemical plant fire in Louisiana knocked some production offline, resulting in a shortage. There are about 5.2 million residential in-ground pools in the US and 255,000 commercial pools. The number of above-ground pools is unknown. About 60 to 70% of those use chlorine tablets. Last year, more people built pools because of the pandemic. They were stuck at home. Also last year, a manufacturing facility of one of the country's major suppliers of chlorine tablets, Biolab, burned down last August right after Hurricane Laura. After the fire, only two domestic manufacturers of chlorine tablets remain, Occidental Petroleum and Clearon Corp. Now, I think this is a little bit of a misstatement here, and I'll explain why in a moment. We have a chlorine shortage. We have record constructions of new pool additions on existing homes because of the pandemic that depleted any supply of chlorine that we had standing. We had a hurricane and subsequent fire destroy one of the largest chlorine manufacturing facilities in America. The other manufacturing facilities, Clearon, is not a publicly traded company, and Occidental Petroleum is just kind of a shitty investment, and I don't want to deal with Occidental Petroleum after being burned by them already. I was looking for another way to go about this, but first I wanted to learn more about the legitimacy of this because sometimes CNBC just posts random stuff and it just doesn't actually have any merit. I was looking at some of the other pool companies, and this is from Webull. Leslie's Pool Company, and this is the one that I'm going to play the options on, thinks there could be 200,000 new swimming pool purchased in 2020 and 2021. Now, that might not sound like a lot, but when you consider there's only 5.2 million in-ground pools in the nation, this is actually a pretty big percent. Demand for swimming pools is off the charts. Adding pool permits have seen 32% year-on-year growth. Keep in mind, part of this has to do with the new housing boom that we've been following on this channel for weeks. A lot of those new houses are being built in the American Southeast in suburban areas where swimming pools are incredibly common. You can't install a pool and then get bored of it 2 years later and let it go. So companies that sell pools and pool products like Leslie's have a steady, sustainable income stream for pool maintenance. If you stop taking care of your pool for a week even in some areas, it starts to grow algae. You gotta scrub it, you gotta shock the water, you got to keep the chlorine levels really high. Maintaining a pool it's a commitment. It's like having a parrot as a pet. It's real fun until you realize it's going to live for like 50 years. Leslie's competitor, Pool Corp, recently reported earnings per share of $2.32, more than doubling its estimate of $1.15. Pool Corp is mostly a pool manufacturer and a manufacturer of construction materials to make the pools, not a chemical seller like Leslie's. Leslie's last earnings report on February 4th, the company announced record results and raised its entire year outlook for 2021. Now, this is a chemical company, Olin. They just announced their first quarter 2021 results. Olin drove sequential pricing improvement for the first quarter of 2021 for chlorine and almost all chlorine derivatives, including epoxy resins. That brings us to Leslie's. This is the company that I want to buy the calls on. Leslie's just became publicly traded last autumn. The company has demonstrated 57 consecutive years of sales growth, and they've had 7.1% sales CAGR since 2001. They serve residential pools, residential spas, professional pools, commercial pools. They have a TAM of 14 million bodies of water and $11 billion in annual aftermarket spending. This isn't like some small store. They have 903 locations. Coincidentally, their location map overlaps a lot of the new housing construction in the American Southeast. The majority of their products are both non-discretionary and exclusive. For their recurring sales, 80% are non-discretionary, necessary purchases. They make their own proprietary chemicals, and they have a diversified assortment. 45% of their sales come from chemicals. Guess what their most sold chemical is? Haha, chlorine. This is on their website. This is chlorine. I wanted to click on one just to see who was manufacturing these, because if they're paying higher prices for a manufacturing company to make the chlorine, then it's going to offset the sales value. Look who the manufacturer is. Leslie's. They make their own chlorine tablets. They are the manufacturer. So they make the tablets. They sell the tablets. Tablets are increasing in price, and they're projected to go another 70% higher in price by summertime. So my plan is to buy some calls on Leslie's. It's one of the largest pool companies in America. Pools are in high demand right now. New home sales are being built. There's a chlorine shortage. One of the largest chlorine manufacturers literally burnt down. Leslie's makes the chlorine. Yeah, they also sell pools and pool supplies, but 45% of their sales income is from chemical sales. The largest segment of that is chlorine. I'm probably going to be buying some September calls on Leslie's to take advantage of the summer pool season and to grab one of those juicy earnings reports. As usual, I'm not going to hold until then, but I'm also probably going to be buying these calls a little bit out of the money. Here's the chart for Leslie's right here. Their all-time high price is about $33, and that was at the end of the January run-up before we had this large stock market correction, but they've started running up again as we've gotten into the warmer months. Current stock price after hours is $28.89. Coincidentally, this big volume day here was when Pool, their competitor, reported their earnings results. Now, the reason I'm saying this isn't actually like the greatest buying opportunity is because the RSI is still really high right now, and the MACD is kind of running flat, and it looks like it might reverse. But because my calls are going to be so far out, I don't think this is the biggest deal, and I'm not going to quibble over a couple of bucks. Now, I have like a bonus little options play this week, and this one is the riskier of the two, and this is going to be really fast for us to go through. This mirrors a lot of what we've already seen. We talked about lumber prices being at or near all-time highs, steel prices being at or near all-time highs. Guess what else? Copper. There's a really cool write-up here on why copper is so expensive. I'm going to include this link below the video so you guys can read it. But in summary, the copper ore mines are drying up. There were labor issues with COVID, sustainability issues. Companies haven't been spending a lot of money finding new mines, so there's just less copper coming out of the ground. On top of that, there's an increased demand of copper because of things like electric vehicles, batteries, photovoltaics. They all use a large amount of copper. Also, we have all of these new housing constructions in America, and new houses require a lot of copper for wiring. So there's a huge need for copper. There's a shortage of production of copper. Copper prices are really high right now. You got to pay it so you can get it. Southern Copper, which is one of the largest vertically integrated copper miners, manufacturers, processors in the world, reported their quarter one earnings last week. They reported an earnings of 99 cents per share, which beat the consensus estimate of 89, 254% year-on-year improvement driven by higher prices. Net sales were up 47% per year. Revenues were driven by higher prices, blah, blah, blah. You get the point. Let's take a look at the chart. They reported their earnings at the end of the week, and after the earnings, their price ended up just dropping off from closing at 72 to opening at 69. And right now we're sitting at 69.55. 85. So we're actually down from a high of 83.15 back in February already, and we just fell off after a good earnings report. I think this one's actually a pretty good opportunity. I'm going to buy some at-the-money calls here on SCCO. I'm probably going to give this one another quarter or so we could get another earnings report in the books, leave the memory of this drop behind us. So maybe I'll be looking at getting some September-ish calls on this one. That's it for today. Hope you guys enjoyed the video. If you want more information on the options that I am playing for the week, make sure you follow my social media. I do post about most of this stuff on Twitter. I'm fairly active on Twitter. Sunday, I'm going to Seoul to record my MTN interview on Monday. That means I don't have time to edit a DD video this weekend. So there's not going to be a DD video coming on Monday morning. I'm going to get one to you guys for next week. Also, if you're new to investing and you want to support the channel, please check out my Webull referral link below the video. If you sign up for an account using that referral link, deposit $100, you get a free stock, I get a free stock. Everybody wins because I'm partnered with Webull. The stock that I'll be getting is worth $30 or higher. Also, they are doing a promotion for the month of April where if you sign up, I have like a 1 in 100 chance of getting a Microsoft share to add to my Microsoft stack, so I would appreciate that very much. If you enjoyed the video, please like the video, subscribe to the channel if you want to be alerted to all my content as soon as it goes live. Make sure you hit that notification bell. All right, everybody, thanks a lot. See you next week.